What's up, y'all? This is Ryan with PZFX Trading, and today I'm going to show you why I took this trade on XRP USD. Right? I got the replay function in effect right now, and I brought it back to September 4th. Today is September 11th. Now, what's significant about this is a consolidation. Now, being inside of a consolidation can bring you great opportunity. It just takes patience. Now, we have a huge expansion to the upside here, and we trade back down into this fair value gap right here. Then we jam up once more. We consolidate and then retest. When price jams down in a hurry like this, it was aiming for the sell side liquidity that was resting below this swing low. Note, as soon as it jammed down below this low, it started consolidating. For 8 days, it consolidated and went sideways. We have a very deep discounted PD array right here. A PD array is a premium or discount array, and array could be a fair value gap or order block or a breaker. Now, this daily order block is going to play a significant role in the reason why I entered this trade. And no, I did not anticipate price to come down here and me enter off of this order block on the daily time frame. That is not how these concepts work. Okay, I'm about to show you guys how to use a higher time frame setup and refine your entry on lower time frame. We can't do nothing at this point. The market has been moving sideways for 8 days. Now let's hit the play button and watch what it does. Now right here on September 6th, the market opens up and it jams up. It takes out both sides of this accumulation. If you guys haven't studied AMD yet, I highly recommend it. Accumulation, manipulation, and distribution. This is what we are seeing occur right here. We have the market in accumulation phase, and here is the manipulation phase. Now, you should be watching this play out and knowing that the accumulation phase is now over with, and we are going into the manipulation phase. So we open up here and we trade up. Why did we trade up? Because we have relative equal highs, which is buy side liquidity. When the market moves sideways like this for 8-9 days in a row, it generates buys and sells. Retail traders have their stop losses down here and up here because they are looking at this area down here as a form of support, and they're looking at this area up here as a form of resistance. Now, here is the edge that we have over your mainstream retail method. After the manipulation phase occurs and we take out sell side liquidity, let's see how price reacts. We trade down and we tap this order block right here. The opening price of this order block. Now, this is where we start to jump down time frame. Once you start to drop down and finesse your time frames, what you are looking for in the things that you have studied will start to unfold before your eyes. This is obvious accumulation. The market just going nowhere fast. Now the market jams up, clearing out buy side liquidity, and then jams down, taking out sell side liquidity. And what it does next is the most important part. After you get that purge of sell side liquidity, this is where things get interesting, because you have to wait on the market to expand, an energetic move, a displacement, okay? A strong move up. I want to drop down to hourly and show you guys what this looks like. There's a strong energetic move to the upside, okay? Now let me go back to the 4 hour. We shifted in market structure at this point. And now when this daily candle closes, we now have a bullish order block, okay? So here is the opening of that bullish order block on the daily time frame. So it's basically these consecutive down close candles here. That is your order block on the daily time frame. Let me play it just a little bit more. All right. When you get a big expansion to the upside like this, all your rules checked out. The first confluence is the accumulation, manipulation, distribution concept. We see that unfolding. After we get this purge of sell side liquidity, we wait on the shift in market structure, and Rule number 3 is identify your fair value gap. This is a long wick right here. So I would elect to go with the bodies of the candles because, as you know, that is where the volume of the price action. So I'm going to elect to go with the bodies of the candles. And what you want to do is identify your fair value gap after that purge of liquidity and after the shift in market structure. Rule number 1 and rule number 2, they both check out. Rule number 3, identify your fair value gap. And we would like for that fair value gap to be around that equilibrium price, and that is 50% of your current dealing range. I'm going to highlight our fair value gap right here. Price trades straight down into that fair value gap. Now I want to measure my fair value gap, and a lot of the times price is sensitive to that 50% area. Not all the time. I do not recommend for you guys to wait on price to always come down to 50% area. I would just watch price because sometimes it comes down and completely fills it in. You don't want to go into that deep of a drawdown. Like a lot of the times I will enter right here at the high of the fair value gap, but that is on lower time frames. When you are on higher time frames, you can't do it like that. You have to play it differently. So now we're going to drop down to a 1 hour time frame because we have all of our rules that check off our displacement leaving the fair value gap. Price trades down inside of that fair value gap. Now we want to see on a lower time frame these things taking place. Now that we have our 4 hour fair value gap, we can start trying to refine our entry. And what do I mean by refine our entry? We are looking for a fair value gap inside of a fair value gap. 1 hour time frame, the market trades up, takes out this swing high, which shifts in market structure. Okay. What are we targeting, guys? We got short-term targets here. These are relative equal highs, buy side liquidity. What else are we targeting? We have fair value gap, which is going to make like a magnet to price. This is what I frame my entry off of, is this 1 hour fair value gap. Now I want to get the exact entry for you guys, 0.33041. Now, when you are entering off of a fair value gap like this, it is safe to say that your stop loss will be safe under this low. All right. So real quick, I want to go back to a daily time frame because you can't just stay stuck on one time frame. You cannot have tunnel vision. You have to understand what you are looking for. Once we got that manipulation that ran out this low, the low of the consolidation, and traded down into this order block, we expanded to the upside. Now I told you when this candle closed, now we have an actual valid order block. This daily candle opens, and when you are bullish, you want to be a buyer at the daily opening price or below, preferably below. So if you find the opening price of that daily order block, that gives you a roundabout area of where you want to be entering at. Now, this is the beauty of finessing time frames. This is a perfect example of why fair value gap entries are more valid than order block entry. Now, this big push up right here on this daily candle, it left imbalance. Nothing but buying taking place. Price jammed up, creating voids, right? Not giving any sellers an opportunity, just straight buying. So we drop down, and that's that daily candle right here. That huge push up. And here's our imbalances, our fair value gaps. When price jammed up, we took out this high and then retraced. We have a new POI. At this point, I'm just teaching you how you can stack entries because the move has already occurred. The market exposed its hand here. We entered on the pullback. I know what you guys are used to. I've been there, done that. You guys have this order block down here. You're going to throw your field right here. And if you are on the right side of the marketplace, I mean, the way these other educators teach you, like Abundance Trade House and EasyFX, they will teach you that you have this FU candle here that ran out the highs of the consolidation, right? And now you have this order block. All right, so look, I'm telling you, I've been in EasyFX. I've been in Abundance Trade House. And I can almost guarantee you that they would have took this trade. You have your accumulation, FU candle, you have your expansion, and you want to enter on the pullback. So you would throw your fibs, from this high to this low. You have this order block right here that lines up with, your kills on all your fibs. And you would have been thinking that this order block is going to send price down, but it doesn't. So just say, for argument's sake, that, you were bullish, your bias was bullish, and you would not have been entering off of this order block. Well, the way their concepts are taught to so many people, thousands and thousands of people, this is how they would have looked at price. They would have seen this expansion up. You have your order block down there, and that order block has to align with your kill zone levels. That's it. This would have been the trade. They would have told you to set your pending and walk away. And this happened to me so many times that I got frustrated and I gave up. I quit. I didn't quit trading Forex. I didn't quit trying to learn the skill set, but I gave up on Easy FX. I gave up on Abundance Trade House. I knew there was something missing. And this is what it is, guys. Fair value gap entry. It attacked the fair value gap up here, like I said it would. I closed partials, and at this point, I'm still holding this trade. All right, so now I'm gonna drop down to a 15-minute time frame, and let's hit this replay button. All right, so this is where your fair value gap was made. Lower time frames is what you need to be monitoring, but the point of interest has to be from a higher time frame fair value gap. Now let's see what price does. We'll speed it up a little bit. Wait, I got the fair value gap marked up. I want to highlight the 1 hour fair value gap in this shaded area here, okay? Now, look what we have on the 15-minute. There's another fair value gap. Just watch price. Price is fractal, so you're gonna see your rules play out. Like right here, you get a jam down, taking out sell side liquidity that is resting here. So after this, you want to see displacement to the upside. You have your displacement right there. So here's our rules. Again, within the same setup, you have your purge of sell side liquidity here, energetic move to the upside, shift in market structure. It leaves a fair value gap. It was somewhere around here that I entered, but anyway, I feel like I got my point across. I really hope you guys learned something from this. It's just me being me, showing you guys true transparency on posting my trades that I've taken, and I want to explain to you guys why. And I also want to prove a point that these concepts work in any asset class. It doesn't matter what you are trading, Forex, crypto, it doesn't matter. You could have stacked the entry right here inside of this 1 hour fair value gap. You could have traded this pair again inside of that fair value gap. You could have traded this pair again right here inside of that fair value gap. And it just goes on and on, guys. I'm gonna end this video right now. I got a lot of content that I have to get edited. I just switched video editors because I was having issues with DaVinci Resolve. So I'm actually testing out 2 different ones right now. I got to get back organized with my video editing. A lot of content coming soon. Just bear with me. Until next time, y'all be good.